Welcome back to my channel, Balance Sheets Matter. In this video, we're going to be looking at the stock OTC Markets Group. So this was a subscriber request, so we are going to be doing a stock analysis on it. But before we get into the stock analysis, make sure to subscribe to my channel, Balance Sheets Matter. I do individual stock analysis videos. So if you like looking at individual stocks, want to get potential good ideas on stocks to buy, value traps to avoid, make sure to subscribe to the channel. And if you do want me to look at a stock, you can put it in the comments below. As you can see, this stock was a subscriber request, and we are going to do a stock analysis on it. So OTC Markets Group, basically, if you've ever heard of the OTC markets or the pink sheets where a lot of the penny stocks trade, this is basically the organization which runs that market, and they themselves are actually listed on the OTC markets themselves, which does bring up one interesting thing, which I don't normally get into, but I will just basically mention it here, is that because they're listed on the OTC markets and not on like the NASDAQ or the Dow Jones, which don't really have an intention to do, there's a very, very low institutional ownership. Basically, as you can see, there's almost virtually zero institutional ownership. So this is almost entirely a retail-owned stock. So this is something you do have to consider, is that because they aren't going to be listed on a major market in the future, you're not going to be having that potential institutional ownership to push up the stock kind of at certain prices. So that, is going to affect the characteristics of the trading for it. So getting into the stock analysis, let's look at some of the top level metrics here. You can see right now it's maybe sitting a little bit on the undervalued side according to the Guru Focus Value Band. We'll see how accurate that is though. The P right now is sitting at a modest 19.76 with a little bit higher earnings expected with a forward PE of at 18.43. And they do pay a little bit of a dividend yield of 1.59% with a payout ratio of 0.31. And the forward dividend yield is 1.82, so that is expected they will be basically raising it in the future. And anyways, the share buyback ratio is actually a little bit negative, meaning they've actually been issuing a little bit more shares than they've been buying back, which I will get into as we dive into the financials here. So you can see basically on the revenue trend line here, the blue line is the average revenue trend line, which has been a little bit over 10.46%. And the green is the actual realized one. So they are expecting to be kind of close to this over the next couple of years. It's expected to be potentially, at least according to analyst estimates, though the analyst estimates for this probably are lacking a little bit of coverage due to being kind of a pink sheet stock, is potentially going to be moderating a little bit more. So we kind of can look at more of this growth rates per share. And you can see over the last 10 years, it's been about 10.5%, and the EPS has been 12.9. And for a very consistent kind of company like this, because they're basically running the exchange for, the OTC stocks, is they probably will be able to continue with this type of revenue trend going forward in the future. So diving into the financials, you can see basically they do have a very high return on invested capital, since, well, there's really not much for them to, invest in. So, this should be high, and I wouldn't say it's the most relevant thing to look at the stock, but it is, just something to notice there. And then you can see the revenue trend basically has, been growing over time. Although when they have had kind of slower periods in the past, like 2011 to 2013, a little bit after the great financial crisis, definitely the revenue trend was a little bit slower, and they did trade at a little bit of a lower multiple at this time as well. And we can see the gross margin basically as they have kind of grown up in size a little bit. It has trended down a little bit, maybe from the peaks of 57%, 56% down to 52, although I really wouldn't say they're losing any competitive mode, obviously, since, they're the basically kind of the only ones in the game for these types of basically small stocks. And, their operating margin still basically reflects his strength, sitting at, 30%. So even though the gross margin has gone down a little bit over the years compared to some of these previous years, the operating margin is sitting pretty good, maybe just a few percent lower than the peaks at about 33%. But if we kind of compare the drops here, there's over 5% drop in gross margin, but they've only lost about 3% of the operating margin. So this is something nice to kind of realize, that the operating margins probably will continue to rise in the future as they grow their revenue, as there's very little selling and general admin basically for a company like this and other operating expenses. So as long as they can keep their gross margins high, we actually should potentially see these operating margins kind of creep back up in the future. And effectively, they have no interest expense. They have, $1 million, a very, very little amount in interest income. So, that's kind of flat, leaves right now pre-tax income of about $40 million. 20% tax rate, they have $32 million on the bottom line here. And you can see that's basically giving them in the last 12 months an EPS of $2.68 per share. And if you look at basically the shares outstanding, they have been slowly inching up over time. And when we get into the cash flow statement, I'll basically explain why that is. But the next thing to check out is their balance sheet. You can see current assets sitting at $60 million or just under, with the current liabilities of 40.5. And for definitely much smaller cap companies like this, the current ratio, unlike larger stocks, is much more important to look at, that they do have sufficient liquidity, since companies like this have a lot harder time getting access to basically capital. And typically if they do get access to it, it's going to be a lot higher interest rates. So, current ratios are very important for, stocks like this, and they do have a good current ratio. And we can basically see their total assets are sitting at $92.5 million, which a little bit of intangibles, which is probably mainly their, intellectual property and, whatever other software stuff. But this is mostly looks somewhat like tangible of their gross property, plant, and equipment. And, their basic other current assets they have sitting on their balance sheet, because, the 60 compared to the 40 there, they have about 20 basically $1 million of actual additional kind of like receivables and, cash more or less. And only the long-term basically liabilities are very little. It's just the long-term capital lease obligations, because they basically don't have any long-term debt, which is very good, for a small cap, stock of, small cap, but effectively a pink sheet stock. It is, this is much better than your standard one, being that they are the, the OTC market themselves. And that, leaves them, total equity of $42 million there. And as we know, at least, $20 million of that is kind of in like, basically cash and cash equivalents. And another 10 is probably in real, a little bit 10 to 15 is real property, plant, and equipment. So there is a little bit of equity sitting basically on the balance sheet. Although if we compare that to the market cap, we're going to scroll back up here. You can see the market cap is sitting at $635 million. So even though this is a good balance sheet, this doesn't really add any additional value into the company being, such actually little total, equity overall. So when we get into the cash flow statement, you can see basically, cash flow from depreciation is, two now, like, 2 to 2.5 million. And the purchase of plant, property, and equipment actually is much lower than that. So that basically does imply that what we are seeing on the net income, what they're receiving on an average per cash flow basis, once we kind of get rid of the changes of working capital and all the other stuff that affects quarter to quarter and year to year, is they probably do have about, $1 million or so on, sometimes even more. And this year it's almost $2 million average, basically higher free cash flow than their net income, because, for them, there's very little investment they actually need to do. And they did do one little purchase of a business back in 2022 for $14.5 million. Didn't look exactly what this was up, but it's probably something, complementary to make their markets, efficiencies to like run better for their existing systems. This isn't probably like they're going to be going and acquiring separate companies and entering different avenues of business. It's only going to be kind of, supplementary type things like that. And then you have purchase of investments and sale of investments, which is probably just treasuries. That's how they're earning that little bit of basically income. So that's pretty normal. And the one thing I will mention here is you can see the stock-based compensation. It is basically for them, even though this is a small company, $6.8 million on, basically your net income from operations above like 31, 32. This is a relatively high amount. So they actually do have to do some share buybacks to basically offset this. And you can see they do a little bit of repurchase of stock, usually around 3 million per year. But when they basically are having the stock-based compensation be a little bit more than that, that is what is causing the dilution. And it doesn't look like they really have any big intentions to purchase back a lot more stock. So I'll kind of expect this trend to continue. And you can see most of the money is basically paid out in a dividend at about, $31 million in the last 12 months there. And, that basically comes out of their free cash flow of, the $48.6 million. So by all means, as we see there, a little bit of equity is slowly building up on their balance sheet, but it's not like a huge buffer. They actually probably could pay out a little bit more do a little bit more share buybacks, for example, or even pay a little bit more of a dividend. But you can kind of see in these past years here, when the free cash flow was sitting maybe around $30 million, and they were paying dividends of, 25, 26 million, there really wasn't that much to work with. But, now kind of because actually we look at 2020 to 2021, they went from 14.5, just about 14 $15 million up to $25 million. That was a pretty significant dividend jump. So anyways, this is something, they can start increasing a little bit more in the future. And actually does look in the last quarter, they have upped it. So when we kind of go probably on the, well, actually, no, it's the most dividends was, paid here anyway. So we'll see if they're going to, pay out more dividends basically going in the future. They kind of seem to actually do it kind of on like one larger, dividend per year. So anyways, we'll see basically what they do, but it does look like they could support a slightly higher dividend yield. And let's just pop into the dividend tab here to see what the projections are. And yeah, the forward dividend, as we say, was before 182. The dividend growth rate over 5 years is 3.4% a year. So it's a modest dividend. It's not very big. The payout ratio is relatively low, definitely sustainable, and they could support a higher dividend, and most definitely will increase over time. So let's jump into the interactive chart here. Basically, the revenue with estimate, it doesn't have a lot of analyst coverage, so there's not going to be very much we can get from this or the EPS. I would just kind of estimate it kind of going forward at this 10% per year, because that's what's historically been there. In the long run, that's probably what it's going to be. And then if we bring up the price to sales ratio, you can see basically when the tax cuts happened, that did raise their net margins quite a bit. If I'll just quickly bring up the margins here. And so I'll bring up the operating and net just to kind of show the difference. And you can see basically the operating margins, they increased a little bit, but they've been kind of being stable here. And as I said before, they could actually start inching up a little bit more as the company grows in scale. But you did basically from this 2013, 2014, get quite a more significant boost in their net margins. So that is partially why the price to sales ratio has basically gone up quite a bit to these levels here. And compared to 2018, it is sitting on the relatively lower side. Though if we go back to 2012, it was sitting significantly lower. When we get into looking at the PE ratio, let's bring up that and get rid of the price to sales. You can see pretty much for the last, almost 10 years, they've kind of been trading between a 20 and, a 27, 28. So this is kind of the fair value range. And there's been a little bit of up movement based in the stock price, but it hasn't been so incredible. It's just kind of been in line with the growth of the actual company. But if you do go back in the past, basically, there was times they were trading at a 15p ratio or an 11, so there is always the, possibility the stock does get a lot cheaper. And this is also basically reflected in the dividend yield as well. Back at these times when the stock, stock price was lower and the valuation was lower, well, it had a higher dividend yield. And right now, well, it's, sitting 1.58%. So I have my little, calculator here. I've been showing the last few videos just to give an idea of basically based on the analyst estimates. And then I just projected forward for 5 years, or it's around 5 years, basically end of 2030, that they would have at this rate kind of like $4 of EPS per share, trading between a 22 and a 27 PE. And you can kind of see right now at their current price that's really at this number right here. This is basically the EPS growth, average compound annual growth rate per year, sitting just under 10%. So, that seems pretty accurate of what, if they kept on the trend there. And if you were to kind of buy it now and this were to continue, you can kind of see if the PE kind of stays the same, well, you're just going to really make 10% if they grow at 10%. And if they were to expand their multiple a little bit, well, there's, a little bit more potential upside there, which, frankly, for these numbers here, for, kind of the smaller market cap stock with no institutional investors, not overall that attractive in my opinion. I think there's a lot better opportunities in the market. When we get into this, the trend here, you can see I've kind of started trying to form this trend that they're doing, which is parallel with the moving averages and everything. And I have this green line here. It's kind of this potential, breakout from 2020 and, support level, because, at $36, either, they could work off a lot of time going sideways and then it would obviously be more attractive then. Or if they came down, the $36 now, we put in $36 into here, you can see these numbers actually start getting a lot more attractive. And I think at that point, that is a point I would personally be interested if I were going to buy the stock. It would probably, I would want to wait for under $40, closer to this 36.35, because then there's actually a considerable amount more upside investing in it. Where right now you're really only going to be getting potentially on average market returns, but you have to remember if there ever were to be a bad market, well, being a small cap stock and everything, actually, pink sheet stock effectively, and only retail invested in with, very little to no institutional ownership, there is potentially a lot of downside for the stock there. And that's kind of why I'd be looking kind of at this, $36 range. And you can also just see on a little bit more of a, technical standpoint. You could actually play this kind of in, both different worlds. You could say this is a, a bull flag potentially forming, like something like this. It's a bull flag potentially forming, and it's going to break out. There's obviously, that possibility that can kind of continues on with this trend here. But you can also basically say that if we look at the 50-month moving average, this blue one here, this was acting as support, Well, we lost it, tried to retest it, couldn't get it again, came down, retested it, lost it again, and we're kind of fighting underneath it. So this also could be viewed basically as a sign of weakness. And I think just kind of from the fundamentals of the stock, it's not a very attractive price to basically buy right now. So that's why I would basically be waiting for a lower price around this $35, $36. Probably a little bit more interesting there. So, that's my thoughts on OTC markets. Anyways, I hope you like that stock analysis. Make sure to subscribe to the channel, like the video, and I will see you in my next stock analysis.